So, hello, and a massive hello to everybody. How are you all doing? Rocking and rolling the free world. Here we go. 50 pips, 3rd of September 2018. Where has the year gone? No trade calls, no recommendations, or response for their own stuff. We're here for educational purposes only. So, before we start, just remember if you've registered on DarwinX through 50 Scouts and you're an active user, you get free passes once a month to the daily webinars we hold. Now, if you've sent me a note through the blog once saying you want to be invited to the sessions, you never have to do it again. But if you are an active user and you've never sent me an email or never used the contact form on the blog to let me know you want an invite, let me know, because I don't have your email addresses. So you have to just reach out and then you'll get a free invite. So going into this week, Turkey, China, Middle East, Argentina, you name it, still a lot of event risk. What are we going to get out of Washington? In general, NAFTA talks with Canada starting again on Wednesday. So there's an awful lot of event risk brewing. And in terms of the data front, despite the fact, well, not despite the fact, but on top of the fact that we have a lot of interesting data, we've got two central banks this week. So we got the RBA and the BOC, and then we've got non-farm payrolls, which is the little cherry on top of the cake to end off the week. So I'm going to keep the update fairly short this week. It's going to be a shortened week, and essentially equities hovering at highs. Nothing much has changed. We did an in-depth video on NASDAQ, on a lot of these things, so not an awful lot has changed. What I wanted to discuss is just basically the DXY as we go into this week, also because we have the two central banks on deck. But essentially, as we close the month, this was what we were looking at, right? And essentially, we've got DXY here rejecting the press higher, getting sold at the 50 back of the move from A to B, right? And the question is it going to continue lower, right? Or is this just a little bit of a pause? But again, the insight we have so far on the monthly is that unable to attract new buyers at highs and pressure is on. Now, I think you can look at this, if you're looking at the daily, sideways hovering there, is it building some kind of a topping pattern? Who knows? I think a lot of people are going to be looking at it in opposing ways, and I think you can make a good case for either side. One side, the longs are going to say, this is the rotation higher come in. We just had a little bit of a funky week going into a long holiday. It was end of the month. Essentially, what's happened is we broke above these two moving averages, and you see we're still holding this broad area, and we're just going to base a little bit until we continue our march higher, and King Dollar is back and here to stay. The opposite way of looking at it is, well, we broke above this area, we got sold to the 50 back, we're back below the two moving averages, and this is going to stay heavy. This is the tell, and we're going to come all the way back down and complete the 123 holding this structural move lower. What we would favor is saying that we want to be cautious and keep all our options open, because it's not that clear. It's not that clear, right? It's not. If it were going to be a clear short, you would have seen that monthly close negative. You would have seen this close back below this area, right? If it was clearly very, very strong, well, it probably would have closed back above this 96. So the way we're looking at it is, number one, it is attempting to continue lower, and the bears are still in control for now. Number two, the bears will not be home free for the big rotation lower until we get closes below the 92.60s. And for the bulls to get rid of these bears for one last time, we need to get daily closes back above the 98s. So we're interpreting this, and again, here I'm looking at it on a weekly. As you see here, you've got essentially the 100 and the 200 week and the 50 here. As usual, we're interpreting this zone as much to do about nothing. Don't get confused about velocity of move inside range. And unless we break outside of this area, we could see a lot of choppy two-sided action that doesn't really mean anything. So it could go both ways. It could go sideways. As always, there's always three things the market could do: up, down, or sideways. To not cop out and pick a side, we feel that there's still more downside, and that even though we may see a move back into the 96s, ultimately we'll probably see it attempt to come back down. Okay. Now, if you look at gold, you could see what's happening, right? And essentially it's the same thing as we were focused on that monthly. Is it still holding very, very heavy, but unable to attract new sellers at lows, and it's holding there? So even here, it's the same thing. You can make an argument for both sides. Our favorite argument as we go into, more favorable seasonal period for gold is that in any case, it would be healthy to see some kind of a bounce here. And as long as we don't get daily closes below the 1200, the path of least resistance is still to try and get a little bit of a bounce going here. Now, since we said it's all about the DXY and we've got some central banks on deck, let's look at some of the let's look at the currency pairs. And what we have here on Aussie is an interesting configuration because we're holding extremely heavy at these lows, and the risk is really for more pain. But whenever the market is so one-sided, you really have to be careful. Now, see how it's trying to base right ahead of this area. And this is a key zone, because if we start to break here, especially following the RBA, there's going to be very, very little reason for the shorts to cover, and very, very little reason for anybody who wants to get long to try and step into this, much closer to those 69, 68s marks. So you could see a quick 200-300 move lower, very, very aggressive. Now, because we like to believe in healthy markets, we still think that if we get any kind of basing area here, this would be a much healthier move, even if ultimately it has to resolve to the downside. But we're very much aware that as we are extended away from this mid-range, away from these moving average, should it not be able to attract new sellers at low, there's a lot of covering that needs to take place, and most likely that would take it back into the 75s, 76s. Now, you have very similar situation on Kiwi with the market, market being extremely short here. And you see, right, should we break below this area, well, there's very little reason for anybody to try and step in until much further down. But of course, because we are so extended, if we need to see some covering, this could happen very quickly, even if we have to ultimately end up this way. So if we're looking at this in terms of Aussie and Kiwi this week, we're looking at it in terms of, can we find, rather to press the downside, can we find a tactical opportunity to get long? No hurry, right? Doctor has an order to get long, but we're looking for tactical opportunities to play some of that covering, potential covering that can come in. Now, if you look at CAD, this is a tricky one because it's all going to be a NAFTA headline, right? So, but if you're looking at it technically, what does it look like? Well, after we finished these symmetrical moves higher, we broke through the triangle, right? We broke above these moving averages. Zoom in, what's happening? Well, previous resistance is acting as support. And this is exactly where in the weeklies we were looking at those, we said all things being equal, you got to get long there. The risk reward is to get long for a scalp inside that area. And here, as long as we don't break this in an ugly manner, especially post NAFTA, whatever it may be, the path of least resistance is probably higher. Now, the big question is, is the BOC going to come out and they're going to go back on a hiking path, even if it's not as aggressive as the Fed? It could bring some downside into play, but right now, technically, it looks like it wants to bounce. I mean, we have no problems about trying to get aggressively short in this area on bounces, especially if the BOC starts to cooperate. But we really feel there is no edge trying to have aggressive positions on until it's clear what's going on the NAFTA. Most likely, we'll be looking to play tactically in the direction of the NAFTA headline, or in line with what BOC does. You know, whether they're going to be hawkish or dovish. If we look at USD CHF, not a lot has changed. Our short is still in play here. We talked about this is similar to Kiwi, except Kiwi is not playing out the way we thought it was going to play here. Very extended positions, beautiful little double top, and we said, you know, there's a lot of covering that has to take place here, and at the very least we were going to look for the move back into these 97.90s. Now once that's broken, you know, there's very little to catch this. I mean, you can look at the 50 back of the move down, but this kind of pattern, especially if the unwind continues, there's no reason why we can't come back and test this bottom side of the range. So as long as it can hold below this area, you know, now rallies will likely find resistance for continuation of this unwind to the downside. If you look at yen, yen is extremely choppy. It's not really going anywhere. It's still stuck trying to decide what it's going to do after that weekly reversal, and it's just kind of going nowhere. Our base case, in line what we've been discussing, is still, especially with event risk and everything, this is going to try and play out, but very much understand that it looks like it's trying to gather support to take a run for the 114.50. So it looks like it may want to do that. We'd still prefer to stick with this view. And what else have we got? We got cable and euro, right? So what's going on cable? Cable, we saw a beautiful little action on the daily. We posted this right ahead of the time on the blog, I think on Twitter too, that we're looking for this to come back into the 50 to stay on trend, and look at this beautiful little failure here on the daily and right back down. So we'll have to see what comes out of Brexit, but this is a very pivotal level. If it continues to hold below 128.50s, 128.60s, path of least resistance, 124s. If it can bounce, the bounce could be ugly in terms of upside, especially if it's on a headline. But for now, we're still sticking with our, you know, selling that move back to the 130 with very tight stops to see if we can get a retest of those lows. And euro, what's happening on euro? Well, you know, whether you're looking at, you know, it's the same thing. It's holding in trend on the daily. On the weekly, it's kind of stuck, like we talked about on the others, between this 200, 150, which are very tricky zones to call. We still believe, and we're still sticking with our view, that this is a possible fake break to the downside. And as long as buyers continue to appear and support inside the 115.50 to 115.00, we're still looking for 118.50s to come into play. Now here, shorter term, the move's quite nice, and you know, this could still just be a healthy retracement, and you see the move here from those lows, from that possible fake break into those highs. You know, this could easily come right back into the 115.50, the 115.100, and that's still a move into a very strong zone, right? Because it's going to be the confluence of the 50 back of that move from A to B. It's going to be this previous key zone. So, I mean, surely it's still in trend and it looks heavy, but we would really not underestimate things. We have something really ugly has to happen for this to break through and not hold to try this rotation higher. And what is that? I didn't plan it this way, but just thought of it. And what's to finalize that? What's that something really ugly having to happen? Well, there's two charts you have to have on your chart on your screens really. And one is USD TRY. Ugly would mean this pressing and holding about the 7 mark towards the 710, 715, 720, where essentially, as everybody's calling, is the Turkish banks are just going to become insolvent. And the second chart you have to look at is USD, so if we can highlight it, CNH. And it's again this magical, for some reason, this magical 7 mark, right? Should this come right back through that 7, then things get very ugly. Now, the way things are shaping up, it looks like, and we would suspect that the rhetoric, what we've seen on the wires, that especially on the wand here, this should be solid, and any move here should continue to get sold. So we still prefer this kind of pattern on the yuan rather than a move back higher, but we'll have to wait and see. Okay, so I hope this deep dive into the currencies was useful. I think most charts everybody's familiar with because nothing much has changed, but it could be a very interesting start to September. Wishing everybody an awesome one. Take care. Thank you again for liking, sharing, and in general for hanging with 50. Take care, guys. Bye-bye.